This asset in today's video that we're going to be talking about can crush the bull market dreams. Ah, yes, we've seen a wonderful January. We got that to discuss in today's Stock Market Brief show. We're also going to talk about some expected moves and some market-moving events that are also coming up. We're going to start here with the S&P 500. Now, I didn't get my weekly recap out, but man, we closed above that 50-period weekly moving average. However, the start of the week is not so hot, down 1.3%, just an inside trading candle, and we are above the weekly 5 EMA, so nothing too crazy detrimental right now. You can see this here on the monthly expected move. So the month currently, January, is up 4.64%. This is the upper monthly expected move, and the lower monthly expected move. And you can see the price action just got back within that. Remember, 68% of the time it closes within that expected move. And you can see we're right there towards the upper end of it. If you take a look at the Qs actually tagged its quarterly expected move and is currently trading outside of the monthly expected move there too as well. Overall, today's trading action, 10 of the 11 sectors were down in the red. Towards the northern section here, the ones that performed the best were more defensive names. This is something a little bit new that we haven't seen really this year so far. The consumer staples, utilities, and healthcare have been towards the bottom of the 11 sectors, still are from a month-to-date perspective, and we've been seeing stuff like tech really catch a bid. And you can see here, NASDAQ was down 1.96%, and then the NASDAQ 100 was down 2.09%. Now, if we keep on going on, we're going to look at the 10-year yield. The 10-year yield is having a bullish crossover there on the price momentum oscillator. So that suggests, hey, perhaps if this starts moving up, the 10-year yield goes up, bonds go down, and a rapid rate of change to the upside could continue to put pressure on those growthy names. But the asset to watch is going to be the dollar. The dollar looks like it's getting ready to potentially get moving, and we have some market moving events that can be the catalyst for this as well. So as you can see, the dollar was up slightly on the day, breaking out of this tight consolidation. So if we get some follow through, as you saw today, it was down in the S&P 500, it may continue back down, but we'll get more into that momentarily. Now, why is it so important to watch this asset? I'll show you here. Okay, this is the S&P 500, but what I'm doing is showing you the correlation on different time frames of the S&P 500 correlated to the dollar. So you can see it from 15 days, 30 days, 90 days, 120, and 180. And what I want to call out here is that there's a pretty strong negative correlation in the 30-day and the 15-day as far as the shorter time frames goes, as well as obviously the longer time frames. So what that suggests to me is if the dollar really does start catching a bid, the S&P 500 can feel that pain and start heading down, which we just discussed. But it's not the only asset. You can take a look at gold. Gold has been on a nice, big, solid move so far 2023, but even starting back here in November of last year, you can see it's at minus 0.91 and minus 0.93 as far as the negative correlation goes on the 15-day and the 30-day correlation. Okay, so gold correlated to the dollar. So if the dollar starts moving up, gold can take a back seat there too as well. Crude oil, you can see here, light crude WTIC, the negative correlation here is minus 0.83 and minus 0.67 on the 15-day, 30-day. So if the dollar starts rising, which we saw the move today, you can see that oil took a little bit of a hit to the downside. But a big asset to watch also is going to be Bitcoin. Why? Well, look at Bitcoin. It has a minus 0.86 and a minus 0.89 on the 15, then the 30-day correlation to the dollar. So if the dollar starts rising, guess what? That can put a lot of pressure back onto Bitcoin. It might be too early for that. If we take a look here, look at the Bitcoin to gold ratio. Remember, we just showed you the correlation the dollar has to Bitcoin and the correlation that the dollar has to gold. So the big correlation or the big asset to watch, once again, is going to be the dollar. If the dollar starts rising, that could put pressure on gold. It could also put pressure, obviously, on Bitcoin. You can see the rate of change is starting to point back down. So if this does start crossing back through this zero line, watch out, because that has provided some excellent opportunities to short crypto assets, crypto equities, and potentially even crypto itself. We're still there at a pretty high rate of change. So it's something to continue to pay attention to. This clicked over on this week right here, and then my buy signal was technically triggered right through this week, so it's in the green as it stands. But a lot of people front run it. When it crosses back above, they look to buy. When it crosses down below, they look to sell. That's just, preference based. Now, we do have coming up this week some big macro data events coming out, as well as earnings to be on the lookout for. So mark these on your calendars or while you're trading intraday, because they can most definitely have an impact on the markets. Tuesday, right? Tomorrow we have all types of data coming out. The big ones are going to be U.S. home prices and consumer confidence. We also have on Wednesday, we have MBA mortgage apps, manufacturing PMI, ADP employment, ISM manufacturing. On Thursday, oh, and by the way, we also have the Fed interest rate decision, right? Consensus says is we're going to be doing 0.25 basis points. On Thursday, we've got initial jobless claims, Q4 labor costs, factory orders, and then Friday we have non-farm payrolls, all big stuff. And then bring back to Thursday, Super Thursday over here, we got Amazon, Apple, and Google all reporting earnings after the close. Like I said, there's a lot of different stuff taking place. I believe there's over like 900 companies in total reporting earnings this week alone. So some big stuff going on. If we take a look at the S&P 500, the lower weekly expected move is at 39.76. That's right below that 4,000 marker right here, that dashed line. And then above that is 41.64. That dashed line's right up here. Now we did start the week down, and it does, like, if you I'll show you. Actually, I'll zoom in right now. This candle looked like a little bit of a shooting star candle. We had some follow through. So that, it's pretty bearish as it's getting back to the underneath of this upsloping channel. I would continue to just watch. I mean, right, this could be very well just a wedge type pattern breaking down back to a little bit lower, but we are still above that year-to-date anchored VWAP. So the average buyer of the S&P 500 or the SPY year-to-date is in the green as it stands right now. So it's still bullish, but there are some cracks, obviously, that we are starting to see. If we take a look at the 15-minute time frame, one of the cracks is we're below that 5-day moving average. Now it's still flattening out, right? So you want to see this start to turn over to be more bearish, right? We can simply see potentially something like this happen where we're wedging right here, right? And the price action's getting, RSI is getting a little overextended. This is starting to curl itself over potentially. This could potentially pop up. And then what we just have here is just a U-turn trade where it just kind of comes in just like this did over here, came in, and then pow, it's kept going up. So come in, boom, pow, right to the upside, dollar drops. That's always a possibility. We got to be ready for it. You want to, if you're trying to be more bearish, you want price to, do something like that, break down and so forth, and try to come strike that lower weekly expected move. That's one thing that I'll be watching for. If we take a look at the Qs, we had that negative divergence, right? I was looking at this right up here, breaking through this channel, had a nice big shooting star candle. I put out a warning there on Twitter, and we got that, pretty big flush into the close on Friday. Today we gapped down. We saw more price action come a little bit lower to the 5-period moving average. We bounced from that level, and then we started to kind of just wedge with a positive divergence here too as well. So to see this pop back up, I mean, we're below the 5-day moving average, but we're just trading right on it. So a pop up is always a possibility. You'd want to see something like that. You'd want to see a series of lower highs and lower lows, and then that can potentially make this a little bit more bearish of a trade. As it stands now, we're still in an up channel, and we have a inclining 5-day moving average. Yes, so step one we broke down. The longer you stay beneath it, the more it's going to curl itself over, which would present itself to be a little bit more bearish. Now, if we take a look at some of the signal charts, BPCO and PQ is still up there in that overbought condition. So, right, like I said before, these things rotate from overbought and oversold, and you can see the price action kind of follows those areas. So it's not perfect in timing, but it does tell you when to be a little bit more cautious. And as it stands right now, you might want to be more cautious from the long perspective than anything. There's a lot of good stocks that are setting up that look like they're going to start breaking out. I've set on my Discord, I set so many different alerts, only like 3 or 4 of them hit today, and it was a bearish day, but yet still they're still holding their structures overall for the most part. So I'm going to continue to watch those. BPINFO, the technology sector, is also overextended to the upside there too as well. Remember, they can rotate back down and so forth. BPNYA, so the broader market, you can see here, overextended on the BP chart there. Financials, they're back there in that overbought condition, or just about, right? 69.98. So just getting into the 70 region would be considered overbought there. If we take a look at the summation index, right, we had that bullish crossover. This kind of stalled out today, so if we get another down day tomorrow, this can start to curl over, and then if the parabolic SAR starts upticking from it, it can mark a potential change in trend where we see a potential move that trends back down like we saw here, like we saw there, and then when we see a bullish crossover, boom, boom, right, it starts moving up. So it's been a good It's been a good tool to find changes in trend. Now, what we have been calling out is this divergence in the Nasdaq McClellan oscillator, where price action continued to go up higher, but the internals were weakening given that it was getting a lower reading on the Nasdaq McClellan oscillator. Same thing goes here for the summation index for the NYSE, the New York Stock Exchange. You can see price action putting in a high and a higher high, whereas the oscillator itself is putting in a high and a lower high reading. So that right there is a negative divergence. The summation index itself is still pointing straight up. So if we get a big hit to the downside, this can start curling over, and that could tell us ahead of time that, hey, we might be seeing a little bit of a change in trend. Now, because I didn't throw out a market brief for the weekly recap, here are the expected moves. This is where the price closed on the week, and then this is the expected move itself here. This is the higher, this is the lower. If you want to screenshot that, and you can mark those levels on your chart if you choose to. Now, while I was doing this, one thing that I paid attention to was on Friday, what I noticed was the VIX, right? It was under 20, and that was like the talk of the town. Bull market's back. But look at what the megas had for the expected moves. Tesla's expected move was plus or minus 18.8. Right? That's a lot of movement. NVIDIA was plus or minus 12.8. And it makes no surprise to me to see at the top of the list today in the S&P 500 as far as downside. It wouldn't have surprised me to be to the upside, but NVIDIA was down 5.91%. Tesla was down 6.32%. We knew the big moves were coming because the options market told us that there was a lot of volatility being packed into this week. Now, what I find interesting here is NVIDIA on day one, it's basically reaching to that lower weekly expected move. We had the gap down, follow through, close on the low. So there's a possibility that we can extend a little bit further, which could make for a potential good intraday trade, right? When things get a little bit too overextended to the downside, they come back and they hang out by the weekly expected move. It's a more tactical trade, so I'm not going to dive too much into that one. If we take a look at Tesla, this is some dark cloud coverage taking place, right? So if you take a look here on the left side of the screen, we have a lot of volume price action that's been traded there. Could be a potential area of resistance, and you can see price came into it. We gapped up today, and then we thrusted through the 50% line on the prior day's trading candle, creating some dark cloud coverage. Now, this does look like it has the potential to reach down to its lower weekly expected move. Like I said, this was plus or minus $18, and we're not too far off of it. We moved $11 today, which is, a big move. So to come back down here is definitely a possibility. I'd be on the lookout for it, but the move did get a little extended. So we'll see here because, Tesla and NVIDIA, they've been moving kind of hand in hand. So if NVIDIA does reach down further, okay, and then Tesla comes in and touches its weekly expected move, that to me, let me fix that. So bear with me. So if Tesla comes in, tags its lower weekly expected move, that might bring NVIDIA outside of it, and then Tesla might kind of stop or pause right there based off of just, what the option market pricing as far as risk. And if it does and NVIDIA gets out, that might be an indication, hey, okay, now I might be able to take a long shot into NVIDIA back up to that lower weekly expected move. You'd want to look at what the intraday charts are doing during that time, but that's a possibility. So something that I'm looking at. That's really all I got for you on today's episode, everybody. Hope you all had a good weekend. Remember, the big asset to watch, especially during all this macro data that's going to be coming out, is this dollar. It looks like it could be getting ready, gearing up for a move as it's breaking out here. RSI is starting to point back up. If it does and we get a rapid rate to the upside, careful because we can obviously see a bunch of different assets get hit. That's all I got. See you later.